I am welcoming everybody, including Anya, who's just joined, on behalf of Ufi at the EEA, David and Ed from the EEA, and Jamie, myself, and Aidan from Omnevue. And this is our joint webinar to launch really our partnership, Ufi. We came across each other through our work at King's College London, which many of you know about, where together King's and EEA launched the first executive education on ESG. And some of you are actually on the course, I see, which is great. But as a result, really, of my academic work at King's, I ended up starting this company called Omnevue about 2 years ago. And so there was a natural kind of evolution when Ufi and Ed particularly were looking at the data side of things. There was a natural evolution to have a conversation with us. So that's why we're launching this kind of separate partnership, but with the same two people, Ufi and myself, really at the center of it. Okay, so what we thought we'd do by way of an agenda, we want lots of interaction as usual, if we can, please. So, and don't be polite, just put your hand up, or even better, just shout, because it's quite hard to see, because there's so many of us on the call. I can't see all the little hands going up. So, Jamie, if you could keep an eye on people as they're trying to ask questions, that'd be great, or put them into the comment as well. That'd be fine. So what we're going to do is we are going to very quickly, literally 3 slides, introduce you to Omnevue, which is the company. We then want to have a good conversation about data. Ed is going to help us out there. We've got James Fry, I hope, on the line now. And James actually is one of the EEA members who's recently just conducted an audit, as it were, on our platform. So I think he'd be a good one to hear from, and so he can tell us why he found it useful, if indeed he did find it useful, and if it was easy or not to do. And then I think we'd naturally kind of go towards a demonstration, very short demonstration of the platform, so you get some idea. But again, plenty of time for question and answers. So is that okay by way of an agenda? Everyone happy? Okay. Jamie, would you mind sharing the first few slides there, and I'll just explain. The academic definition of data quality, for what it's worth, is that it's fit for purpose. And I think that's an important thing to bear in mind, which I'm going to come back to throughout this conversation. But if we are led to believe that ESG factors are recognized by the investment world and the business world as being impactful in terms of company value, both in terms of profit and loss, but also equity values, right? If they really are as important as people are saying, and I know some people dispute that, but if that is the case, then clearly the purpose of this data is to help make critical decisions about resource allocation, all kinds of decisions affecting our people, our buildings, procurement, all kinds of things. So it's pretty important that, in our opinion, the data is financial grade. And that means that it's capable of being audited, or assured is the word for non-financial data. So that's very much the principle behind which the company was set up. On the next slide, we can see some of the metrics that we look at. Jamie, can you? Thank you. And I'm not going to go through them all, but again, it's a good mix of environmental, social, governance data. All the, obviously, carbon scopes are in there, scopes 1, 2, and 3. But there's things like renewable energy, waste, recycling, water. These are all really important other environmental measures aside from carbon. On the social side, in the middle, it's largely split between employees at the top and then customers at the bottom. And the customer aspect of social is often overlooked, but obviously it's crucial. And you guys know more about that than anybody in the hospitality business. And the governance side, again, something that's often overlooked, but it really is, how well are we organized? How well are we set up? And if we think about data management, do we have the right systems in place? Are we constantly checking them? Are we certain that the effects, the causal effects that we think are happening really are in place? So these are all really important elements. Just so you know, we've deliberately selected these metrics to be pretty representative of the EU taxonomy, which is the core reporting framework used by corporates, banks, and all financial institutions. It's got a 73% alignment with the framework. The reason why it's only 73%, just so you know, is that there are 4 pretty obscure buckets in the EU taxonomy around hazardous waste, weapons, and other kind of esoteric things which don't affect most of us as normal businesses. So it's a pretty good list, and it's designed to be, as I say, very useful for all TCFD reporting, CSRD, SFDR, and any reporting really that has to be done, GRI, etc. We're going to show you a demonstration, but just let me show you a concept of how the platform works. The whole thing that we set out to do was to try and make it really easy and affordable for small and medium-sized businesses, which many hospitality players are. And small businesses, as we know, can go right up to 250 staff and more, and large 20, 30, 40, 100 million in revenue. So we're not necessarily talking small businesses, but we can be at the other end as well. And we needed a platform that would be not too expensive, clearly, not too resource heavy in terms of time, trying to get people to learn all this stuff, trying to find complicated data, making people think about concepts and topics that really they've no reason to do anything about, like what's your carbon emissions? Why should any of you know that? And yet a lot of platforms that are offering services in this area will expect you to fill that data in. So we went at it from the other way around completely, and we said, look, because we want to make it easy, let's start with data that's in the business already. So there's about 7 or 8 buckets of data. Your accounting system has a huge amount of it. Your HR system, vehicle logs, facilities records, so stuff that's already in the business that you're already using. We can plug into that using APIs where we can, automatic plugins where we can, or simple drag and drops. Sometimes we provide you with templates. And essentially, from those 7 or 8 sources, we collect what we need. You don't really understand why we're asking for it, but you don't need to. We then collate, cleanse, organize the data. We calculate the metrics, and we feed it out on the platform in very, I think, intuitive graphs, charts, simple insights, simple tasks that you can do. And at the final stage, we then also provide you with an assurance report, an audit report, if you will, which is to international accounting standards, just the same as your financials is. And as I say, because we believe that this data is decision useful for really important financial decisions, it needs to be financial grade. So we'll show you this at the end of the conversation, but essentially that's how it works.
Mark,
yes.
You just used the very interesting word, cleanse the data.
Mm-hmm.
Would you just be able to elaborate on that a little bit?
Yeah, I mean, for instance, a lot of data in accounting systems is put in at the bookkeeper's discretion. Everything isn't rigorously assigned to the same buckets again and again and again. So there is some cleansing that has to go on. Ed will know about this from a data point of view. Data is never perfect. Sometimes things are double entered, they're misspelled. There's all kinds of errors in there. So it does need to be structured and cleansed in a given format for us to work with it. And one of the key things we do is to take this disparate data and to put it into a structure so that our machine knows how to do the calculations.
Thank you.
Okay, does anyone have any questions on the broad concept of the machine? Obviously, it'll be more interesting when we show it to you later, but make sense? Okay, next slide, Jamie, and then I'm going to shut up. The point is, you put in this data, it takes about, if you're a well-organized business, and I understand not everybody is, but a lot of you are, it can be as little as 4 hours. Our record client did 2 years in 4 hours. Okay, because as I say, it's all there. One of the things on the tool, which Jamie will show you later, is that we have a collaborator function. So we collect the data in chunks, financial data, IT data, facilities data, etc. And we allow you send it off essentially to the financial director. He's got all the data, or she has all the data at her fingertips. Very easy for them to load it up. If you're dealing with the logistical side of things, send it to that manager. They've got the data. No point you digging around for it. Let them load it up. So by spreading the load, it really speeds it up. The point is, it's all going to be in one place on the platform. Log in anytime you want. You get insights, as I say, simple insights. We're not pretending to be a consultancy, but there is some good, useful kind of easy actions you can take, identified in the platform, both for carbon and about 24 other metrics. It's all assurance ready. Now, this is important because even if you don't want to have it assured now, if 6 months' time, one of, say, your bank or one of your investors, or you're going for a loan and they say, is the data assured? And you've gone to somebody who doesn't use international accounting standards to prepare the data, your accountant will turn around and say, I can't assure it, because they'll need a paper trail. Just like a financial audit, they have to have the evidence. They have to be able to track the paper all the way through. So it's really important the manner in which it's done enables all those tests to be made at whatever point they're needed. So that's an important thing for you to consider. And the key thing we're trying to do, as I say, is to provide you with all the answers. Your customers, particularly on the corporate side, I know a lot of corporate procurement departments are now asking you guys this when they're making bookings. But as I say, your banks, investors, other stakeholders will be looking for this information because they have to report under these new regulations. And your scope 1 and 2 is their scope 3. Okay, so we'll come back to that if you like. Very important that we prove you're not greenwashing, and obviously it's downloadable in any format you want. Okay, so I hope that's an introduction very briefly to us and the platform. By way of us as a company, we're 2 years old. We've just signed a deal with MasterCard, who are now introducing us to 450 of their issuing banks around the world. We've got some venture capital money in, and we are working very closely with the EEA because of our accountancy basis. In fact, I'm designing a course with Ellie, our head of audits, to fill the skills gap for accountants, to help them do this auditing and to help them use our tool to prepare accounts. So basically that's us, and we're absolutely thrilled to be in this partnership with the EEA. And Ufi, if I haven't said it before, and David, many thanks, and Ed, thank you very much. We're very excited about it. Right, let's get on to the next section. Obviously, you guys need to start reporting. You've got vast amount of buildings with lots of people involved eating lots of F&B. So you are huge consumers of water, carbon, food, etc. So reporting for your industry, which is why Ufi started and her colleagues started the EEA, is really, really important and a huge opportunity, I think, for you to not only correct maybe some of the reputational hits that the industry takes, but actually really to get out ahead of it all and make a big, big impact, both on climate change, but also inequality of wealth and other social inequalities. So on we go, Jamie, thank you. This is just to say, in case any of you don't know, a lot of people are saying, when is the regulation happening? You know, does it affect me, etc. The answer is it's happening now. 24 is the year, as you can see, when basically it all starts to come into effect. And it does affect small and medium businesses, not directly, because you don't have to report directly, but all your customers, your investors, and your banks are requiring this information. So just quickly to run through this, the companies who will have to report under CSRD, which is the European one, or the TCFD, they have been for the last year in Britain, are the larger companies, 250 plus employees and a certain turnover threshold. I can't remember what it is, but you know, they're the large corporates. They've been having to report on this. They started on TCFD last year. They haven't made a huge amount of strides, but what a lot of them have done is they've started realizing the problem and they're now organizing their data management requirements. So we're seeing a lot of SMEs receiving requests for information now coming down the pipe. The European regulation starts this year. It's not just CO2e, it's also those ESG metrics that I mentioned earlier. Investors, pretty much the same. Their European equivalent is called SFDR. So that means if you've got any money in your organizations from any major institutional investor, they will have to report. They will have to get data from you in order for them to report. Banks, there's a new regulation coming in there, the third line of the blue in the middle there, banks, which is a very interesting one. It's essentially new regulation under the SFDR whereby banks have to report on the amount of loans that are green loans of their total book. So it's called the green asset ratio is what GAR stands for. And that is for the big corporates. That starts in January. And then in July, The following one is called BTAR, and that stands for, forgive these EU acronyms, Banking Book Taxonomy Alignment Ratio. But the important thing is that SMEs and non-EU corporates are in that numerator. So the banks will have to start trying to prove that they're giving money out for green lending. So it's in our interests, all of us, to have good data that facilitates those loans, clearly. Because I know at the moment there's still a lot of debate. Is there really a market incentive in terms of preferential rates? And arguably there isn't really at the moment. But I think with these new ratios coming in, I think one will develop pretty quickly. The pink at the bottom is only to say, which many of you know from our conversations, if we've been together on various calls and things, is that all of this is underpinned at investors' request by the IFRS, the International Reporting Standards, new sustainability standards, S1 and S2 they're called. They're focused on CO2e at the moment, but they're moving on to ESG and a host of measures over the coming years. And in there is also a new ISSA 5000, which replaces the old assurance standard. So you've got a new audit standard, if you will, to go alongside new accounting standards in this sustainability area. So you can see that whatever Sunak is saying, whatever Trump is saying, whatever the various politicians around the world who are, trying to score short-term points are saying, the regulatory infrastructure is now in place. It may be delayed 6 months here or there. It doesn't really matter. This is going to happen. It's landing now. And the big stuff, as you see, starts in January. So it's a perfect time to be having this call. In terms of the UK, just very quickly, the government has said, the FCA have said, that they will endorse the new IFRS accounting standards by July at the latest. Our understanding, we work pretty closely with them at King's, is that they really can't kind of back off that now, that it will happen, despite what the government is saying. So that's, I guess, a background to say that the need for decent quality data has never been more paramount and is never more pressing. So it's a good time to be having this call. Just before we go on to the next slide, if we, Jamie, go back, does anyone have any questions on regulation, accounting standards, anything like that? Anything they'd like to raise?
I've got a quick question, Søren here. I wondered, when you're getting data in, are you cross-referencing to see the validity of the data, for instance, on the CO2? Are you comparing companies against companies just to see whether what is being reported actually is valid?
Yes, absolutely. It's a very good question, Søren. Absolutely, we will answer it in about 5 minutes time, if that's
okay. Fine.
Because we have a whole section.
I'll hold my horses.
We have a whole section on benchmarking. It's an excellent question, and I'd like to do it justice rather than half do it now. And I know Ed wants to speak about it as well, so we will come back to that.
Mark, can I ask a question about the ISSA 5000? This quality stamp in effect. What impact may that have on the current state of green certification programs, which a lot of small businesses in particular in the industry are using?
Yeah, it's a really interesting one. And given the stance of Omnevue, rather like Mandy Rice Davis, I would say this, wouldn't I? But the reason we as a company decided to focus on the accounting route is because we knew these standards were coming. And I think a lot of other preparers of particularly carbon information are doing self-certification, as you say, Ofi. They're basically saying, we'll give you a certificate. B Corp, things like this. They're essentially either well-known kite marks in the case of B Corp, or not very well kite marks from individual CO2 calculation companies. A bank is just going to look at it and say, so what? It doesn't matter. Can you imagine in the financial world, a bank saying to you, I want to see your profit and loss for the last 3 years, which they often do when we're looking for loans, right? And they naturally want it audited. And you go, well, don't worry, I got EEA, Ufi's got this fantastic auditing scheme from the EEA, it's excellent, and I've got it done by them. And you think the bank's going to be happy with that? So the whole point of these international standards is that they are trying to create consistency and comparability with financial information. That's the stated aim of the IFRS. And the only reason they're doing it, remember, is because IOSCO, they are the body who regulate the world's capital markets, went to the IFRS and said, we need to have information that is consistent and comparable and the same professionalism and rigor as financial data in the non-financial space, in the ESG space. So the idea that they're suddenly going to allow one half of it to be financially audited and rigorous, as it has been for 70, 80, 100 years, and the other half to be a bit of a free-for-all, isn't really a flyer, I don't believe. So I think hopefully that's an answer. Okay. Anyone else? Okay, let's go on to the next slide. I think what we're trying to depict on this slide is an evolution of data quality with a particular focus on the next 2 years. So if I just take you through the architecture of the slide, I think for those of you who were at the EEA summit last year, we talked about ESG, the shift from ESG 1.0 to ESG 2.0. And those of you on the King's course will have heard this many times. It's a frame I basically used to demonstrate how ESG 1.0 was the early years up to about 2022, when basically it was all self-selected, not unregulated, voluntary, self-assessed information, cherry-picked, okay? But the shift came in ESG 2.0 when it's now mandatory, the regulations we've just seen, it's about accounting standards, and it's got to be audit grade, exactly the conversation we've just had. So if you think about the role of data in those two different periods, in ESG 1.0, let's be honest, it was really a marketing exercise. It's about messaging. The requirement is that the data is illustrative enough of whatever message you want to put out there, okay? And we've had lots of examples of people giving 3 computers to the local school and then saying, big double-page spread in the annual report, how we're supporting education. Now, that's not a lie. They did give 3 computers to the school, but it's only illustrative data. If there was any risk, and there was very minimal, it was maybe some reputational risk, but hardly any. As we move to the right-hand side beyond the dotted line, we're into a very different game. We're now about reporting, but also decision-making for your businesses. Therefore, the data needs to move pretty quickly, we believe, from estimated to financial grade. Because the FCA, we've seen several cases in the States, risks. I know some of you were on the King's course last week, and Megan was telling you about the new risks that are involved in terms of legal risk, in terms of liability risk and things like that. So we have Delta Airlines, for instance, facing $1 billion class action lawsuit for claiming carbon neutrality on the basis of carbon offsets, forestry offsets. Okay, we've got 14 airlines in Europe being taken to court now. So there is regulatory sanction coming down the pipe. We've seen Goldman Sachs, Deutsche Bank, etc. The FCA, again, not speaking out of school, but they have said to us they are waiting for a big one to make an example of. So there is regulatory sanction out there if you are just playing the reporting game. But clearly where it really matters is if you're using this as MDs, as CEOs, as boards of directors to really make resource allocation decisions, it has to be financial grade, because now we're talking about financial loss and gain. And I think in this climate, as we go forward, it's really a combination of the 3 risks at the bottom that are a significant risk to the business. And ESG, one way of thinking about ESG is that it is a risk mitigation tool. It helps you identify potential issues amongst the staff, or bullying, or bad procurement practices, or whatever it may be in advance. And that's an important aspect of all of this. So that, I hope, explains the need to move essentially from the left to the right. And some companies are saying, look, I don't want to make decisions yet. I'm just going to do the reporting that I have to do for now. And they're sticking with the estimated data, up to them. Seems a bit daft to me. Why wouldn't you just go straight for what you need what you're going to need anyway, and particularly what you need as a business to help inform your decisions. So that's hopefully useful. Next chart then, I think gets into your point, Søren. And there's 2 types of benchmarking that we are offering essentially through this alliance with the EEA. I'll start with ours, and then perhaps Ed, you could pick up on the EEA side. So all of our metrics, all the ones I showed you, are benchmarked against, where we can, science-based benchmarks. So the IPCC, the Paris Agreement for carbon, for instance, the UN have a target for water consumption, for instance, which, depending on where you are in the world, is obviously really, really important. And we're thinking about you as a global industry here. Gender pay gaps. There are targets set either by, where we can, science, government or regulatory bodies, the best academic evidence we've got, or best practice in business. Best practice in business being the last. But to give you an example of that one, we look at pay, and we take the top quartile in your industry, in your country or region, as the benchmark, to give you some idea there. Let me take the last point on the left there. We are also introducing, which will be built by Christmas, a cross-border benchmarking tool. We're going to start with carbon, but it will extend to all ESG metrics in time as the data becomes available. So when you come onto the platform, you will get all your results, but you will also, as a small business, be able to put in, okay, I'm a hotel in Switzerland. How do I compare to France, Italy, UK, etc.? We're building this in conjunction with MasterCard. It's a requirement that has emerged from our work with them. I'm also hoping to get the UNEP Financial Initiative group onto it. And we have possibility of also working with the Institute of Trade, Export and Trade here in the UK. So we're trying to build a coalition, essentially, of people who have an interest in this. The other reason that it doesn't, well, it does affect you guys to an extent, but more, there's a new carbon border adjustment mechanism which has been brought in by the EU. It's effectively to prevent bad carbon performing products entering the block over time. It starts again in January this year. There's 6 industries identified at the moment. So if you're importing cement, if you're building a hotel, for instance, you will have to measure your carbon according to this. So this benchmarking tool is really important for that. And as I say, we're starting with carbon, but a plan to expand it out to include social and governance benchmarks as we can. And I think that provides a useful basis, a useful kind of groundwork on which the EEA and Ed can build a specific benchmarking tool. So Ed, would you like to tell us about that?
Yes, thank you, Mark. So I'm Ed Birkin. I'm the economics advisor for the EEA, and helping advising on some of the data requirements. So the way I view it, and hopefully we view it, is the EEA is here to help the members and to deliver what the members need and want. So any feedback over what you believe would be important to you would obviously be very much appreciated. And we've based it on feedback already, but this can continue to do so. We're not here to dictate what should happen. Now, when I was asked to look into putting together a benchmark for energy carbon usage for hotels, I thought, yeah, that's pretty simple. I deal with data. Turns out it's not as simple as I thought. And I'm going to flip slightly between include benchmarking and CREM, which I assume all of you know that, but effectively that is, it's an EU thing which tells you when you're going to have a stranded asset. And back to Mark's point earlier, where he said there's some debate about whether there is an ESG impact on valuations. We know categorically that property prices are getting discounts if they have a stranded year earlier. So people are discounting the value of properties that are not living up to the carbon usage it needs to be. So to put it most simplistically, the CREM, which effectively says when your asset is stranded, the formula they look at is carbon emissions, so kilograms of CO2 per meter squared per year. Now, the only thing that we actually have data on is the year. It turns out that not many hotel operators, and it's not just hotels, it is also other businesses, we spoke to Creme about this, aren't brilliant at knowing their floor area, especially when it goes to specifically their exact floor area between different parts of the hotel. And then trying to ask someone, as Mark alluded to, their CO2 emissions, I mean, where does it start, especially in SME? Where do you start? You know, you've got gas, you've got electric, you've got renewables, and this is where we need, or to get the data in that's verified, certified data. Someone like Omnevue is fantastic for us because we can get that data in a certified, verified way. Now, why does it need to be verified? Firstly, for this to have credibility. So we want this benchmarking to be credible for two reasons. One, for our members. You don't want to be making business decisions based on a benchmark that other people have put in their estimates, which can be wildly different, you know, as Soren's point. So in order for you to have the confidence to make business decisions based on benchmarking, you want to know the data and other people's benchmarking data is accurate. And secondly, there's going to be human error. We're not assuming people are going to try and play the system by hiding, you know, carbon usage or anything, but it's just too difficult a thing to be able for most people, especially SMEs, to be able to work out their carbon usage. So having this verified data from Omnevue to help towards this is for us is key to doing what we're trying to do. Now, there is benchmarking out there. We know we've spoken with some members. There's Cornell data. The one thing I'd say on that is that while it's a good starting point, 70% of that is verified, which means 30% we don't know. And again, not saying someone's just going to lie, but there's a significant issue of human error in something that's so complicated to estimate. But also that verified data is, from my understanding, ticking a box saying it's verified. So we don't actually know if it's verified, and people who have submitted to that have said there are different levels of verification that they have compared to other people have, etc. Now, why do we need benchmarking, and how does this relate to CREM? Well, two reasons. One thing we are working with is we are working with CREM to get a starting point of where hotels should be, and the fact that there are different levels of hotels, and to try and influence maybe wrong word, educate and explain, you know, why a hotel isn't just a hotel, and why the starting point should be where it is, and going forward. Because a lot of feedback we've had is for the hotels, the operators, they think CREM's kind of useless insofar as it's so hard to meet the standards, it's almost impossible. So why even bother? So let's say that were the case, you know, which we're looking to change, and we don't believe is. But then you go, well, if I can't meet CREM, what's the point in looking at it? So, okay, let's say the whole industry can't meet it. Well, surely you still want to be the best in your industry, or you want to know where you are. It's one thing saying I can't meet these unrealistic targets if they are unrealistic or remain so, but you also don't want to be in the bottom quartile. You know there's a lot of room for improvement. Likewise, let's say we get to a situation where everyone is going to meet these CREM targets. Do you really want to just say, I have achieved the minimum standard that is required by legislation? No, you also want to know where you are compared to others. So we need verified data in order to advise and work with CREM to get the right targets for the industry. And even with CREM at the right level, we also think it's important for people to know where they are, you know, compared to peers. Now, in an ideal world, you know, you would be able to look at it on all the different levels of hotels. Are they resort hotels? Do you use the STR classification, luxury, upper upscale, upper mid-scale, by how many rooms, by if you've got a spa, is the energy usage being used, you know, is it the spa and the resort part that's actually you're doing better or worse than people, is it the rooms? That's not going to happen, quite frankly. There's not going to be the data able to be or willing to be supplied by the industry. The amount of time and cost and years it will take for people to have sub-meters in these different areas, while I would love it as a data guy, I think we need to be realistic. At the same time, we don't just want, this is a hotel in the UK, how does it compare to other hotels in the UK? Because although that may be a factually correctly, you're using less or more energy or carbon or water. Again, it's irrelevant comparing a luxury hotel to a kind of economy hotel. So we're looking at breaking it down into as many areas as possible, thinking along the lines of the STR classification, maybe by number of rooms as well, with some room grouping. But we have to be realistic because there's the volume of data and there's the quality of data. And if we break it down into 1,000 different subgroups and we have 3 hotels in each, that's kind of pointless. So I think we just need to be realistic into how much of a breakdown we can do to still have the quantity and quality of data, but in order to make the comparisons fair between some different areas so that it's actually meaningful to you. So we need verified data, because if you get crap in, you get crap out. I mean, that's just the first rule of data. So we need to make sure it's good verified data. We will be looking, and hopefully that answers some question in terms of bias, and people will be able to look at quartiles as well, so it won't just be looking at the average. I suppose the question back to Mark or Jamie at some point is how their verified Omnevue data is able to pick up on if people are, specifically trying to cheat the system for reporting. Can you hide a secondary electric supplier, etc. Ours is taken. We're not going to be going in the weeds and saying, we think you're lying to us, or there's big miscalculation. That's why we've chosen Omnevue as a partner, to know that there's someone who is able to do that verification, because that's their role. My role isn't verifying energy data, but obviously we will look at outliers and exclude them if something's slipped through the net. So that's why we need the kind of verified data. On the other side, in order to get what a lot of members are asking for, we actually need the data. And as much as I would love to say 6 months time, Omnevue will have enough data to be able to give this vast amount of benchmarking across all the different asset classes. I think to start with, we will probably need other data and maybe look at a kind of fully verified versus semi-verified one from some of our members. And I know that some of this is already used for things like Cornell, and there's a reticence to kind of do the work again or kind of give it out twice. But at the same time, we need verified data from our members. And if they've gone through some third-party verification already, then that can be used in some benchmarking perhaps. But just taking it from a survey that has non-verified data, we don't really think allows us to achieve our aim and what members really want and what CREM wants. So there has to be, if people want the results of this, there has to be effort and input from people contributing towards it. It can't, the data isn't out there, and it can't just be magicked out, I suppose. So yeah, with this data is important, we think, to make decisions, as Mark alluded to, is what members are asking for. It's important for CREM, which is key to the industry in terms of property valuations. But you need high quality and a large amount of data in. The more you're breaking it down between asset classes, the more data you need, so that each of the asset classes has enough data for it to be credible. And so the more you want out of it in that respect, the more needs to be put in by the industry.
Thanks, Ed. That's great. I think just 2 very quick things, and then maybe James Fry from Beyond Apartments, who literally was on our platform only a week or so ago. It'd be great to hear from you in a minute. But just on Ed's point, just to give you some idea, everybody, of the variation that's potentially in this data. If you apply the GHG protocol, which, to be fair, is what pretty much everybody who tries to calculate carbon applies, and you use all the allowed methodologies, approaches, and data sets, okay? And I've written a paper about this with colleagues at King's. We can send it to you. It was in the FT and stuff. We can send it if you want. But you can get a difference in the same company if you use the UK data set of 4.6 times the amount of carbon. If you use the US data set, it can be 6.7 times. Okay. Now I know this isn't a direct correlation to temperature, but it is related in some way to the 1.5 degrees. So think about it. We're talking 1.5 degrees, might be 7, but at 4 we're all dead. Remember, so it matters a lot. Okay. Now the point about accounting, we all know this. Accounting is not foolproof. There is fraud. We know that, but it's the best system the world has to verify stuff. And the advantage is that somebody, to your point, Ed, has gone right back to the source data. So in our case, we go back to the electricity invoices and we see how many kilowatts of energy you use. So and the invoice is the proof that the accountant needs to make it auditable. So that's the level of verification that we get into. And the reason being that the accountants, when they prepare these accounts, when we prepare our accounts, they can list how they've done it, what they've checked, just like a normal audit. And you mightn't agree with it, but at least you can replicate it and know exactly what's been done. Whereas many methodologies are opaque, very difficult to understand, not deliberately not that clearly stated. And as I say, an accountant can't audit those in some way. When we do benchmarking, we will need to think about what's been self-audited versus independently in some way. But it's an exciting area, this whole benchmarking piece. James, I know you, just before we get onto the tool itself.
Mark, can I ask a question just before you go to James?
Yes, of course, David.
Because it's right to the heart of what you're talking about. If you've got an electricity invoice from which you're deriving CO2, because that's what you're saying.
Yes.
But the generation company behind that could have got the electricity from a fossil fuel power station,
yep,
or from a wind turbine or a nuclear plant. In
yep,
the first case, it's CO2. In the second case, there's no CO2. How do you distinguish between those situations to give an effective CO2 number? Because that's right at the heart of it, isn't it?
Yeah. So for every major utility supplier, pretty much every supplier, they have to publish their energy mix, i.e. where they're getting the different part. Is it from alternative or fossil, wind, solar, etc. So they have to publish that. So that is publicly available. So we use that data. So at the time of the purchases that we know, you bought X kilowatts of energy, right? At this time, this was the energy mix of the company you bought it from.
So in your system, you've got all the energy providers in any national market. Is that right?
Of the main markets, yes, yes. Because there aren't that many. In truth, there aren't that many. I mean, the States is a bit different, as you know, but there aren't that many.
Question here, because it's not just the states and general energy providers. For instance, in Spain, where I have to live at the moment, there is a huge incentive for resorts to put in their own solar energy, and the states is actually sponsoring this.
Yes.
So they have maybe a one-time incurring cost on that, but then they will have a mixture of suppliers, their own and what comes in from the state.
Yes.
So there's a question of that. Then I have another question, because it mentioned that we're measuring it over the year. Now, if you are, for instance, in France, and we're talking about cross-border platforms here, and you have a resorts which are in the Alps, which are only operating, well, maybe 4 months at the moment, but in future maybe only 3 months a year.
Right.
How do we then benchmark that? Are we bringing it down to consumption per bed night? Because otherwise we don't have a correct benchmarking against resorts which are maybe on the Côte d'Azur, which are operating throughout the year.
The most common way, Soren, of measuring the carbon in relation to the business activity is what they call carbon intensity. So essentially you work out the amount of carbon per pound of revenue.
Okay.
Which can obviously take account of those factors.
Yeah.
To go back to the net effects, you're absolutely right. There are net effects, and this will increase as people are creating their own electricity as we go forward, 5-10 years, that would increase more, and we can take that into account in the platform. The GHG protocol allows for 2 levels. They want specific data, where it's available, right, or market data. So in the case where an energy provider or the data for some reason wasn't available, you can then use the national average of the energy mix at that particular time. So there are various ways of getting at this. The important thing is that the paper trail is transparent and clear, so that people know what's been attempted and tried to be done, as opposed to, don't worry, we've certified it.
Sorry, and just on your question about the room. So one thing we're looking at for the EEA benchmarking is to do it per meter squared and per room, because then we can just have, you tell us the hotel, the size, or no, the hotel, the size of it, and when you sign up the number of rooms. We are looking at potentially doing in terms of occupied room nights. It's just that's another layer where we're then expecting. So let's say on the Omnevue, when you sign up, you put in your number of rooms. We get the data through, so we can divide it by the number of rooms and things that. If then each year you have to put in occupied room nights, it's another level of complexity where how many people are actually going to put that data in. So from a data person, I'd love to have 5 times as much information. The reality is it's going to end up being incomplete data that probably isn't therefore comparable, because that's just reality. We need to make it as simple as possible for people to get enough accurate data for benchmarking.
Good. Okay.
Great.
James,
Thank you.
do you want to just give people your impressions, whether they were good or bad? And please don't hold back. Anything that annoyed you, say it. Go for it.
Yeah, thanks, Mark and Ed. Mark, I think if your idea was to make it simple to use, I think you've achieved that. I think linking it to accounting software made it very easy to upload a huge amount of data very quickly and reliably. That's where everything goes for us. So there's no way of hiding anything. I also think having a point of contact, we had Jamie, who was excellent, who asked very good questions or had answers to our questions, and gathered data that maybe won't always sit within our accounting tools, such as how I get to work, how far I come by train, how far I come by tube, and that kind of stuff, which all factored into it. I think, I run beyond aparthotels and apartments. We're an operator. What's important for us is to communicate what we're doing sustainably wise, and we're ultimately a sustainable business that happens to provide accommodation solutions. I think the 3 valuable metrics that we're being asked for are scope 1, 2, and 3, which is only going to increase going forwards. Obviously that's something this spits out. I think the intensity metrics was really interesting in terms of the emissions per pound of revenue. That's again something very easy for us to identify, measure, and see as we grow and hopefully increase our revenue, how that then measures up. Are we reducing our intensity or increasing it? So I think that's again a really good benchmark against our peers. And what Ed was saying, I think it is very valuable for us to be able to see where we sit against our peers. So the more we can do that, although I understand totally what you're saying, it's very difficult to do that against a coastal resort and a city-based hotel, but I think it'd be very interesting to say, let's say in somewhere like London or Manchester or Liverpool, where we're all struggling with the same conditions. I think the third one is the social and governance side. A lot of people talk about how that's difficult to measure, and I think being able to give a score or a monetary benefit for what we're doing or not doing is really valuable, just something to base that on. So I think in the scope 1, 2, 3, the intensity metrics, the social and governance were 3 really interesting things that we felt were coming out of this, and were reliable. I again, following on from what Ed was saying, I think something to compare ourselves to our peers. We hope we're towards the top, and we'd like to see. We'd like to then see if someone is above us. We'd love to know what they're doing, and maybe copy some of the things that they're doing. So that would be really interesting. Again, using a square meter basis, square foot basis, the sort of energy use intensity metrics would be maybe useful to add to this, so someone can plug in per hotel, you know, how much square meters they have. You guys are those involved in hotels. You know, we're all very reliant as hoteliers on our property management systems, our PMSs. I just wondered, as an idea, something that can link into that, can be a plug-in, would also be useful, because then that data can feed into Omnevue or vice versa, so we can see, you know, based upon occupancy in a particular month, or January might be lower and July might be higher, how things are changing. That may be a step too far, but overall, I was impressed. We're not the largest organisation or most complex organisation, but it is what we're all about. So being able to plug something in fairly easily, and then certainly the initial setup, you know, we had to provide a fair amount of data, but I think going forwards that will become easier, and then see those results in a very clear form. And again, you for me talk a lot about making things simple, stupid, you know, so people understand and can take it on. I think the way it was presented was very good. It was very easy to sort of understand. After this, I'm actually presenting the report findings to the Beyond team, you know, so putting that up on a screen and going through that. And I think the way it's presented, I haven't had to sort of take that and put that into my own format to simplify it. It's easy to interpret, which I think is really useful. And one final thing, Mark, you mentioned earlier, you know, are we seeing the benefits of taking the action that we are all hoping that people are taking, or a lot of people are starting to take? As a small organization, we have had Google, Meta, Netflix come around us, and that's because one of the biggest corporate agents presented to those guys and said, here are the big boys, this is what they're doing, and by the way, here's Beyond, they're a sustainable operator. In all three cases, those big companies said, great about the big guys, can we go and see Beyond? We want to know what they're doing, we want to put our people with us, and they've all come to use us. We had a call from Al Gore's company, Generation Capital, saying, hi, we're looking for the best, you know, suppliers in all areas. We'd love to come and find out what you're doing. So I just want to reinforce there is a definite benefit, because I know that we have to talk about economic benefits for people to take this up. But I think, and the more we can demonstrate that with the data, with the results, the more take up there's going to be.
Congratulations, James. That's brilliant news. That's
a great story.
Full disclosure, I'm not even sure I've met James before, so I
no, we haven't met.
I'm not asking him to say anything. The one thing I would like to just touch on, which you've touched on, James, is because it's financial grade data, I can then link ESG data to the profit and loss account. So the machine will spit out, oh, you've saved this much water, that equates to this much money. You've saved this much carbon, that equates to this much money. So there's some useful insights around money. And it's because it's financial grade data. So that's terrific. Now, what we were looking to do was, Aidan, do you have a question?
Just a quick question, because it touches on the bigger ecosystem. And I think you mentioned at the start, I mean, the banks are a big part of this. Ed mentioned a point earlier on about, you know, if you're thinking about the value of a building, the emission performance of a building will be a factor in terms of the value of that asset. Or at least that's what I understood you to say, Ed. Just as you were talking, how far away are we from the residential market? I think we call it a BER in Ireland, or it's an EPC in the UK, where, you know, an asset, a house, has an energy rating, and I know for a fact it has a bearing on the price that asset will achieve in the market. You know, those factors feed in. Are we a long way away from being able to extrapolate from the data that EA have, and that, you know, we're deriving within Omnevue? Are we a long way from being able to, if you like, it's almost like the quality score idea, but an emission scoring factor for a building that then would help drive an investment decision vis-a-vis that building, whether it's a bank deciding how much to lend against it, or are we a long way from that? Or am I asking, is that a redundant?
No, it's a great question. And I guess, Ufi, that's Ufi's and Ed's ambition in a way. I mean, it's one of the places that this might end up in. It's the idea of having standards, really.
I think, Aidan, I think there's, and correct me if I'm wrong, there's going to be a thing exactly like that, but I'd say there's 3 areas where you look at it. You have things like BREEAM, which will measure all your energy, the whole hotel building, all residential, hotels, anything, office blocks, and give you effectively certification of excellence or whatever on that. You will have what's used by a lot of property investors, which is where I got this information from, was they will look and see your trajectory of kilograms of CO2 per meter square per year, see where the creme line is, when it's going to cross that, given its current trajectory, and they will then put a discount on the value based on when it's being stranded. So they use creme, not entirely, but there's a big part of what discount. And then a final bit back to Mark's earlier question, point of, is there a benefit from the banks about cost of financing for green projects? We're on a panel in was it Berlin? Somewhere in Germany. We're in Berlin, yeah. And as hosting something on this, and there's a senior banker for one of the big Spanish banks who's involved in lending to the hospitality industry, and his point was that they don't necessarily, they shouldn't think about it as in, if you have a green project, you'll get a cheaper rate of finance. You should think of it as, if you don't have a green project, we will not lend to you.
We won't get any finance. Right. Yeah.
Okay.
I'm just conscious of time, everybody. So we were hoping to do literally a 3-minute demonstration of the product, but we could, whoever needs to drop off, we're now out of time, so should do that. If anyone wants to stay, Jamie, we can stay a few minutes, can you, if you wanted to?
Mark, can we also set another time to demo for anybody who is interested, and we could recirculate an invitation?
That would be a good idea. So why don't everybody, who should they email, David? What's the best way to organize that, or Jamie? Should they email Jamie?
Yeah, I have a list of the attendees, so I'm happy to follow up after the call.
Perfect. So why don't we do that? That's a good idea, David. Let's do a much shorter. Let's do a half-an-hour call. We'll just do a demonstration of the platform. You can ask any questions about that, etc. So Jamie will be in touch, and we'll try and find maybe 1 or 2 dates to try and accommodate everybody. Okay.
May I just, hello, this is Inge Höblis. I'm the Chief Sustainability Officer of Radisson Hotel Group. So I think I'm one of the few operators on the call. So thank you so much for organizing this. And thank you, Mark, for this overview. I think it's great to have a tool that links to financial assurance. My question is, how does it link to the SBTI framework?
The SBTI?
Yes, because we are all using that for our net zero targets and yearly reporting. Yes, we're actually literally, we will answer that on the next call if you like. We're literally doing a mapping exercise now. I mean, in essence, our data goes in there. So it's our benchmarks, where they are science-based, will be the same as theirs. And the data we give you will enable you to report against their framework. So I'm going to show you the mapping a little later on. The SBTI, it's although it's quite widely used, it is actually it's not a
not simple.
Well, there is some debate around how scientific it is in all measures. So there is some leeway in it as well. I mean, it's not a completely official, as you know, it's not a completely official source, but it is a pretty good source, and a lot of people are using it. So we'll show you the mapping, and you can see what you think. It's probably best to do that. Either we can do that separately, Inge. Why don't we do that? We do that with you separately. And again, if you want to talk about it on the next call, we can do that. We're also doing the same exercise, by the way, with SFDR and with the European taxonomy, to show people where the data sits against the various elements.
So Mark,
I would love to be on that route.
Can I just make a final quick point? It's on James's. I thought it was very interesting. He was talking about, it'd be interesting to see the energy usage in January, per room nights with occupancy, etc. The fact is, at the moment, I just don't think there's enough people interested in this area enough. There's people who are doing it for compliance reasons. There are people on this call. Okay, most people on this call are probably in the top very few % of people who are interested in this. And while I understand that yield management is the key thing for hotels, that is why people are willing to give monthly data on occupancy and RevPAR and average room rate to STR and get that data in. Until people are willing to put the same amount of effort into this, unfortunately, we're not going to be able to build the same benchmarking tool. And while a lot of people on this call, I hope everyone believes that is important, you've already got the occupancy data, you've got the, you sign up with someone like Omnevue, and yes, it's an annual thing, but you can give monthly data on carbon, etc. It would, for the data guy, it'd be great to have all of that. But realistically, there's still not, you showed the slide, Mark, earlier about what we have to do as a minimum for compliance. And there's not enough people who are looking at it at the way that James is, of going, it'll be great to get this level of detail, on a monthly basis to really use as a key metric like we do for yield management. And unfortunately, as an industry and as a whole economy, outside of the hospitality, we're just not there to be able to do that.
Anthony, but I think
a lot to do in order to actually get training out there.
Go ahead, Søren, say that again.
Yeah, I think we've got a lot to do to actually train and educate the whole industry about it, because it's not just a yearly thing or a quarterly thing. If you use it correctly, and then you can drive basically your CO2 down on a monthly basis, maybe small increments, but we will never get to zero in Twitter unless we actually take a stance and say, okay, this is what we've done so far, this is what works, and the next step, what we need to do to increase this.
Exactly, Søren. Exactly. I mean, Inga will know the value of having the data to make quality decisions. These are not short-term benefits to change the systems and the way that these buildings operate and the staff training and things like that. These are longer term programs, as you say, Søren. So you have to look at a return on that investment over different time periods than perhaps the traditional. And obviously, groups like the Radisson are doing this, and many
doing very well.
But the time scale is an issue here, because you've got the profitability yield time scale is quite different than the mid and longer term. And there's a real temporal issue. I see Inga smiling, but that's an issue. But it does need to be bridged, that gap. And the only way to bridge it is with good data that you can explain why the decisions are made. You can work out different returns over different periods, but it's all dependent on the core input. Okay, very good. So let's do that. Thank you all so much. We will see you hopefully on another call to do a very good demo. And Inga, we will pick up with you separately on the SBTI point. No problem. Thanks for the question. Bye, everybody. Thanks very much. Thank you, Ed. Thanks.
Thank you.
Thank you.
Thank you, Mark.
Thank you.
Thank you, Ed.
James. Bye.
Thank you, everyone.
Bye.
Bye-bye.